So what's one of the most important things you can know is your credit score. I'll be right back with Cyrus to talk about that. Hey, Cyrus.
Hey, Brenda.
Thanks so much for joining us. And of course, welcome, Halifax Real Estate with Brenda K. We can't see her today, but the sweet Miss Frankie is right there. Yeah, she is right beside me. So, Cyrus, today, I want to talk about the credit score because there is, like, to me, and this came up in a conversation with you and I a couple weeks ago, because, you know, I call you up and I say, hey, is credit score 680? It's good, I get a house. And you said, wait, there's way more to it than that.
Right. Yeah, there's a lot of layers when it comes to the credit score and what actually goes into the kind of the analysis, right? So the score is one piece of it, but really what we got to look at is the entire credit profile and the entire credit report, because it tells quite a bit of a different story as well, right? So the score gives us a general indication of where things might be, but there is a lot more that goes into it in terms of repayment history. How long have you had credit for? What kind of credit have you had? How have you been able to manage different forms of credit versus loans or credit cards? So these are different things we look at, where sometimes a score might be artificially a little bit low, but it's only due to maybe a credit card being close to or at the limit. Whereas if you were to pay it off, it would boost the score up maybe into the sevens, or maybe your score is around 680, 690, and it's because you've just kind of been missing payments every few months, and it just doesn't look like it's just a few different things we'll look at, and the lenders will look at to say, hey, what is your overall profile also look like, right?
So the difference between the credit score and the credit profile is the history of your credit is your credit profile?
Correct. Yeah. So the credit score just generates, credit score is made up of, you know, a few different factors, like how you've made your repayments on time, you know, your utilization of your credit, how much credit you've had, length of credit. So the score is kind of populated based on a few different factors, but we're taking one step deeper, and we actually have to look at the actual report itself and say, okay, well, you might have a 725 credit score, but you might only have had credit for a year, right? So okay, you've got to look at these different factors, because every lenders and banks have different criteria when they look at credit scores and what they want to see, but also on the credit report. Sometimes they want to see that you've had credit for 2 years, right? So, or maybe you're sitting at a low, maybe like a 615, but you've never missed a payment in your life. And maybe it's because one of your credit cards are showing that they're over the limit. So initially we look at the score and say, okay, well, that's not very good, right? But then if we actually look at the credit report and realize, well, why is the credit score lower than it should be? Because you haven't missed any payments and everything's been good. You've had credit for a lot of years. But yeah, this credit card is just reporting that it's over the limit, which is having quite a bit of an impact on your credit score, right? So
it may be below 680, because you know, in my mind, like if you're not 680, you're not getting a mortgage.
Yeah, and there's not really a hard fast. I mean, there is, some of them say minimum 600, but if someone's in the low sixes for reasons of like missing payments, typically you're not going to get approved. It depends, again, bank and lender, but typically the threshold is 680 and above. They go one step further and typically say you want to be in the sevens. But usually, again, the credit score is not really the be all end all, because you could just have a low credit score just for a very kind of a superficial reason. That's a very easy, you know, fix, and then it's no longer an issue, right?
So if you had, if your credit score was down a little bit due to, say you're over the balance on your credit card, yeah, so it's down, and you take the time, get that credit card paid down, how long does it take for that to reinstate, to pick up your credit score?
Pretty much the impact can be immediate in a sense, right? So your credit card companies report your credit card balances once a month on the statement date to the credit bureau agencies, right?
Oh, so, I didn't know that.
Yeah, so it's not a daily thing, right? So
wow.
if your credit limit is, let's say, $5,000 and you just spent $4,000 today and you pay it off tomorrow, they would never see that, right? So they would never even see that you spent that money on the credit card, right? But if you let it report to the statement date, and then all of a sudden your balance is 4,000, and then the credit card company reports on their, whenever your statement date is, depends on when you get your credit card. But if they report and you have a balance of 4,000, well, then that's your balance that shows on the credit bureau. Even if the next day after that statement date you pay it off, it won't report until the next following statement
30
date of whatever the
30
balance
days.
is on that
Yeah.
statement, right? So if you were to, if your credit card is over the limit and you pay it off tomorrow, if your statement date is 10 days from now, it won't obviously report until the statement date. So the impact can be immediate in the sense that whenever the next statement date comes along and it re-reports that the balance has been adjusted, then your score could increase quite significantly. And we have seen quite a bit of an increase. Like you can sometimes see some drastic increases, right, for people. So
when you say like a drastic increase, how many points are you talking, Cyrus?
Yeah, it's so case by case, but we've seen, I've had people come to me who have had their credit scores in the low sixes. And we've given them some pointers like, hey, bring this credit card down below this amount, pay this one off, do this. And within a month or two, we've seen them get up in the sevens, right? So you can see quite a bit of and again, that's just because the credit score is not due to, derogatories. It's not due to you having items in collections. It's not due to you missing payments. It's not due to, mismanagement. It's just due to some high utilization, which is an easy fix when you pay it down, right? So the people that have credit issues because of missed payments or collections, those are the ones that take a lot longer to rebuild that credit score, right?
Okay. All right. Yeah. So if you're just say graduating university and maybe you don't have a student loan, you don't owe anything to anybody. How would you go about establishing credit that you could purchase a home?
Yeah, the first thing you want to do, and the most important form of credit that the banks look at, is really your credit cards, because a credit card is really up to you to decide how much you pay on that credit card or how you manage the funds, right? A car loan is easy. The money comes out of your bank account every month. A student loan, money comes out of your bank account every month. You don't have to manage it, right? But if they give you a $5,000 credit card, yes, there's technically a minimum payment, but they're not coming to pull it out of your bank account on the day that it's due, right? So it's really up to you to manage how you repay that credit card. So anybody who's looking to get any sort of credit started off the bat, the first thing you want to do is try to get yourself some kind of a credit card. And the best way to do it is just go to whatever bank that you bank with and apply for whatever they'll give you, right? And then you want to periodically try to increase the limit on that credit card, right? Like maybe they only give you $1,000. Well, then you use it for 6 months, you make all your payments on time, you go back and try to get a limit increase. Maybe now they'll give you $3,000, right? So you just want to, and usually having more than one form of credit is good too. So if you can have maybe 2 credit cards, if you have a credit card, maybe you can yourself a car loan because you need a car or whatever, not encouraging people to go get car loans, but you just typically want to have also just more than just one credit card or credit loan or whatever that might be, right?
What if somebody said to me one time about buying a prepaid credit card to help build your credit score?
Yeah, those are called secured credit cards. So those ones are typically for people who have no credit. So sometimes the bank might not give you a credit card unless you secure it. And all that means is that they're going to give you a credit card for $500 or $1,000, but you've given them a security deposit of $500 or $1,000, right?
Yeah.
And that's really popular. Yeah, sorry, go ahead.
Sorry. So there's people out there, how would a person, like say you're 28 years old, 25, 28 years old, you want to apply for a mortgage. I can't imagine anybody that has no credit history.
No, it's like getting approved. Yeah, there is people that just think cash is king and think that no credit is, they think that because they've never borrowed money, they technically would have good credit, but you've never shown the ability to repay credit, right? So in the bank side, no credit is technically bad credit because they don't know how you're going to be able to manage it, right?
Right. Exactly.